Hey traders, welcome to another edition of the Crypto Lab with Alex. I hope you're all well. Can you please just confirm, because we had problems with the sound. Do you read me well in the military terms? If just somebody who is live can just type in the chat box that the sound is okay. So if it's not, I'm going to try to do some of the adjustments in the OBS that we use. If we are fine, we can continue with the overall macro and crypto outlook as usual. Okay, so thank you, Pamu. Sound is fine, so we can roll on. Let's go. Let's revisit our macro scene first. As I said, even over a couple of months ago, we are pursuing this thesis that we are going to see some larger correction in the rates on the downside. The first signs of that definitely was read up in the last inflation 8.5 readings from 9.1, and we think this will continue in the next reading, which is on 13th of September, I think. We have the NFP numbers next week, and we have, of course, the Fed meeting on 21st. So we are still going to pursue the thesis that we are going to see very soon either Fed staying neutral, I think already in November. Of course, that will be dependent of the numbers we're going to see in a couple of weeks, or we are very close to the reversal or the neutral place that Fed is going to pause for some time, which will bring rates down, and of course US dollar with it. I'm going to back this thesis with the charts, which we did in the last couple of months, and of course then we're going to switch to cryptos and to see the latest events there. If you have any comments or any charts that we would like to look, please just drop them into the chat box. So let's go and let's start to revisit first the CME Fed tool. This is just a chart which displays the market expectations, what the Fed will do. Of course, the 21st of September is going back and forth between the 50 and 75 basis points. For now, as you can see, 75 basis points is leading. Market already priced that in. So for November, this is just a question on the figures or CPI. I think it's gonna when it comes on 13, maybe they're gonna switch Fed even to 50 basis points move. But as you can see, market for now is pricing 16.5%. But the November one is more interesting. From the last week, this dropped to 14%. It was a bit higher last week. So as you can see, this is the neutral stance. If we go to 3.325 in November, we have actually 14% for now that the Fed is going to pause. So 46.4%, they will hike 25 basis points and then 50 basis points. So sorry, this is a 50, this is a 75. So in that respect, we are going to look for no, I got it wrong. Sorry, this is 3 to 325, which is a pause. This is 50 basis points, 25 basis points move, and this is a 50. So we are already going down in the market expectations. Of course, this will be a data dependent, but just the appearance of this in the November meeting, and this can jump, especially if we see when we see the new inflation numbers, I think. So we're going to continue to track that and actually to follow as a follow-up to our thesis what we see in the chart. So we're going to start with the 10-year yields. As you know, we are breaking this almost a 40-year of deflationary trend. There is a lot of reasons for that: COVID, supply side, war in Ukraine, energy prices, movement on the upside. Of course, people was spending government's money around, asking for goods which was not there at that time. So all of that has comprised this inflationary cycle on the upside. And we think this first cycle is actually is about going to finish soon. So definitely we are trading in the range which is probably going to offer some type of resistance. And if we plot the Elliott Wave count and also look some of the RSI reading on the higher time frames, we are definitely starting to trade in the ranges from where we can see some reversals. This is a daily chart. As you know, we have been following the thesis or precisely more the wave count, that this is some type of a wave for consolidation or more directional move. So we do expect a little bit more upside in this 10-year yield, and then we expect relatively either a solid or a bigger reversal very soon in the next couple of, let's say, 1 or 2 months, because the rates move slower. This is actually the event in the March of 2020, and as you can see, already for 2.5 years, this 5 waves has been produced. So rates are moving a bit slower than the other assets classes. So if we switch to the European one, we are looking for a 10-year Bund, so this is the equivalent of the US 10-year yields. The larger trend is broken, at least temporarily. As you can see, this is the 40-year chart. And from our perspective, since ECB has already started the rate increase cycle, they are now in the position to continue so, but with a lag and with a much less maneuverability than the US counterpart because of the situation in Europe. But as you can see, we do see this finally maybe on the path to produce the intermediary wave 3, wave 4, and wave 5. We're going to have ECB meeting in second week of September, I think, or a first week. I think it's on 9th. So that will be a second week of September. And from there, after we trace out a fully 5-way move, we also gonna expect correction in rates there. But as you know from lows, whenever you see a 5-way move on the upside and you don't have a flat before, that implies that the rates are going to continue after a pause. So the situation is a little bit more lagging the US, but for now it is developing in a proper Elliott Wave impulsive wave, and we are thinking that we're going to see a fully developed 5-way move, which will have a further implication for the rest of the at least next couple of years. So let's switch to dollar index. So dollar index, as you know, is poking our levels. This is the very long-term chart. It's around even from 1969. So this is the monthly RSI. So as you can see, only 2 times we have been in history of this 50 years close to this 81 or 80 levels. So we are approaching that. So if we drill down to weekly, we are also making even currently now some divergence with a higher high and lower highs on RSI. I do look RSI on these higher time frames. I think they're pretty reliable, and I have tested that through my career many times. So in respect of the Elliott Wave count, even if we take this as a ABC X ABC, or we take this as a fully fledged 5-way sequence, we will see that 5th wave most likely it's going to be over very soon. We have a target around 111, 112, so maybe 200, 300 pips on the upside. So if we switch to daily, we do think that we are very close. Maybe this will actually morph into some type of a sideways price action before we finish this upside rise. So this will be actually a completion of the 5th wave. In the 5th wave, which will actually produce a pretty sizable move to the downside, which will actually either produce a bigger correction or a smaller one. So we will see in regards of the rates and actually the behaving of the dollar. We have to also be aware of what the other central banks are doing in the world. As you know, Bank of Japan is at 0.25 yield curve control. So most of the funds are flying into the US, either in stocks and bonds because of the either rate differential or investment on such a cheap borrowing. So of course, if you look the dollar yen chart, you will see what is going on there in that respect. But that might be over soon because of this correction. So we do see just a little bit more of a sideways, maybe a little bit more upside or more directional, but we think that very soon the dollar will start a correction looking all of these metrics that we usually look. If we switch to commodity index, this is the Thomson Reuters commodity index. As you know, we have been pursuing some type of a B wave. We have a 5-wave sequence on the upside, a little bit above our previous target. And we do think that we are now in developing of either a larger or a bigger correction in this index, which means that after this is actually over, we're going to see a more downside in the Thomson Reuters index. So we can also confirm that looking a couple of other commodity charts. So this is the soybean chart. We think that the first 5-wave on the upside is done. So we are looking what is going on here. 5 waves down, a pullback, maybe continuation to the downside. If this starts to go further lower, this will actually be transmuted into a third wave, which will be very bearish. For soya, for now, this is still a bullish chart because we have a clean 5 waves up. And after a correction, we might continue further on the upside. So looking all of these metrics, we do actually back our thesis, macro thesis, that we are going to see soon move down in dollar, move down in rates, as opposed move down also in European rates. But after some time, this will take a longer time to unfold. And also, we are seeing a couple of commodities showing the same possible path. If we look also the oil chart, so let's look what's going on the oil chart. We will see that we are bouncing off from our support level. I have been explaining what I'm viewing on oil from my perspective. So I do see higher oil in the years to come. I have proposed 2 wave counts, depends what will happen here. I don't have any problem moving the wave 1 here if this starts to trade lower after this pullback. And actually completing this a little bit higher in a wave 3, 4, and 5 over the next couple of years, or we can keep this one, but the condition for this is that we see higher prices in oil in some type of intermediary wave 3. But my opinion is still that looking this long-term chart, that we are not done in oil, and this is not a truncation as somebody suggested. Of the 5th wave here, which happened at 2007 or 8. To be more exact, it was 2007, I think. Let me look that. It was around, it was 2008. So, okay, guys. So I hope we offered some clarity on our macro view. So we do think, just to summarize, that we are going to see a lower dollar, lower rates for some time, just a pause, not the end of the trends. So just a pause for a couple of months in these setups, and we do see a potential reversal happening very soon. If we switch to gold and silver, which we have been processing for, I don't know, already maybe 2 years, the situation is relatively the same. We still don't have a confirmation that this wave 2 is done. Overall chart, as you know, was in favor of the development of the further upside movement in gold. So this will be a regular flat. A regular flat means that the 4th wave unfolded between all of these legs actually has a measured move or equality. As you can see, they are very relatively rare, I would say, patterns. So in that respect, it's nice to see a regular flat. Usually you're going to have some version of expanded one. So we still do need a higher time frame confirmation. For now, this is going well. We are bouncing from this support equality, 38.2% retracement, if we count the whole move as the 5-way move, as you can see here. So we do have a corrective process finished around equality at the time elapsed in the wave 2. So we are waiting a firmer confirmation, and once we have a 5-wave move on the upside from these lows, secondary wave will be a place for us to be interested to pursue gold on the higher levels in the next year to come. The same stands for silver. Silver has reached levels very close to our targets. So this is something that we do think potentially maybe have one more move lower in this flat, or this will be the end of the green wave too. But if we look the higher time frame, we still need to confirm actually the reversal pattern and have a reversal signature on the higher time frames, which we don't yet. So I do see this as a potential 5-wave move. Once this is developed, that will give you a high probability, actually a confirmation that the downtrend is done or the correction is done, and that we are embarking on a pretty sizable trend in silver on the upside also in the years to come. We did forget to look total crypto market cap. We're going to just briefly turn to that as we transgress to a crypto section. So I do still, as you know, hold that this is some type of wave 4. I don't think this wave 4 corresponds in any measure to this wave 2 length. This was not a complex correction. This was a simple correction. This was the ABC movement. Especially you cannot consider Y movement because I see some charts to be such sharp affair. So I do think this was a simple wave 4, and the guideline of alternation, which is just a guideline, do suggest that you're going to see a larger wave 4. So either this was a wave 4 in a flat or in a complex ABC down in flat, X ABC for a completion, and we're going to see a bullish reversal, or this is going to be some triangle affair which will pair with a halving cycle. So we stopped at 38.2%. Wave count invalidation is at 372. So we are still holding this level, and our thesis is still working, and we're going to keep it like that. Okay, so there is no reason for us to change our opinion. As you know, I don't change these opinions very often because I don't see any use for viewers and for clients of trading analysis if we change on any move up and down our overall outlook. As you can see here, we are trying to pair the macro outlooks also with cryptos because of the liquidity, and because also Bitcoin and a couple of other cryptos behave as a Nasdaq beta play. So we are going to continue to monitor this. I'm going to show you also the Bitcoin chart, of course, which doesn't differ much from this one of the total crypto market cap. So I'm repeating this every week. We do still think that this is some type, either a completed fourth wave. We are holding this 200 moving average for now successfully. And I don't see a reason to change this as well. The only thing how I will change it is that if this proves to be a third wave here, and we do trace out some longer term triangle here, and then we switched further on the upside. So we didn't change still our bearish outlook. There is a lot of sentiment, negative sentiment out there. People are looking on cryptos around 10K, 3K. I've heard that a lot. Also, like they looked here, cryptos to go to 200K, 100K here in November. Many people fell for that, and actually crypto retail was decimated, as well as the longer term holders on this move to the downside. So we approach this very carefully with our members. So if you want to have some certainty and risk protection, and a little bit conservative approach than all of this what's going on in crypto space, I will definitely recommend trading analysis as a place for you, because we do care about our members, and we don't hype on any cryptos, any projects. We do not recommend them. We use our technicals and macro outlooks, and from the perspective of Elliott Wave, we are very strongly rooted in that. So let's switch to Ether. Ether has a little bit better position in my opinion, because technically it is working progressively nicer on the upside than a Bitcoin. We did cross this 200 moving average much more above than a Bitcoin, and kind of in a more certain unfolding of this potential 5 waves up. Maybe we are in a correction, maybe we have one more move on the upside. I still think we actually started correction in a wave B or a wave 2. In the case Ether also morph into some type of a triangle, but I do still continue to hold that Ether is bullish. There is no reason for us to change this outlook. On the higher time frame, we did hold very nicely 38% retracement levels. I do think that also that this is the down in A, flat in B, down in C, very simple correction. And I do think either this is a complex or we're going to morph a little bit more in a triangle, and we actually just moved this wave 3 here. So we will see that. But for now, Ether behaves impulsively, and we're going to stay on that bullish side for now. So I will not look too much to behave under the sentiment. We do just read the sentiment, of course, and we try to avoid it by any means. Sentiment is deadly for traders, especially if you are immersed in it. We try to stay out of it and look purely from the technical and the macro side. We keep emotions out as much as we can. So I do recommend you not to listen to the sentiment, because it has been so negative, and you can see that the prices are, especially in Ether, still holding very nicely on the upside. So I also get many comments of traders on Twitter that Bitcoin is going to move lower, sentiment is awful, like they say, yada yada yada. But as you can see, technicals still doesn't confirm that, at least for now. So I'm going to stay bullish. I'm not going to change my opinion because of the current sentiment. And currently on Ether especially, we have a confirmation that at least we might see, in a worst case scenario, at least a triangle consolidation instead of directional move on the upside. So let's see. So let me look some of your questions and comments. So thank you guys for the heads up on the sound. We had some problems with the OBS. I hope now it is okay. So Felix is looking for a copper. So if you are looking dollar lower, of course you're going to look copper higher and Aussie dollar higher. So let's see what's going on copper. We're going to look copper futures. Yeah, so for now we are still trading around these levels. Potentially this might be a corrective move, or we're gonna see rather a bigger impulse on the upside. So let's look if we have 5 waves from the lows. For now, it looks like a 5-wave movement. So for now, it behaves relatively nice. I still cannot confirm the reversal, but as I said, watch the dollar, especially for that. And despite that, copper is moving higher, of course, with the world markets. This is a relatively choppy development. Usually is something that you're going to see from lows, but I will not dwell into a couple of things here which might be problematic for the impulsive wave count on the upside. Let's wait a little bit more and see how the pullback and the completion of this will actually unfold. So for now, we are holding these levels, which is a good sign. I don't think we can ascribe a fully 5-wave development here. We can actually do some type of a leading diagonal potentially, and then look this for some type of a flat, a shorter flat, and then continuation. So we will see. I think it's still early, but I like Aussie dollar. How does it look? So I've been stressed and warning about the Aussie dollar for a long time. So Aussie dollar still looks pretty nice from the lows. We might have seen some of the potential reversals as an impulsive wave here. So I have this as a WXY, which I think it fits much more better than ABC. And potentially we are at the lows in a B wave or a secondary wave, and then most likely very soon after this flat is done, and dollar starts moving lower, Aussie, although it's not in the dollar index basket, but it is in the commodity spectrum, might continue to move further on the upside. So let me look a couple of other. I'm a new viewer, but a long time TIA Live. Looking forward to being a regular. Thanks, Alan. Good day, Alex. Good morning, everyone. Good morning, William. Oleg, thank you on the sound. Alan is saying sound is very low, so I don't know. I cannot be that anymore, so maybe you need to increase your volume since the others are saying sound is perfect. So. Yeah, Lawrence, I cannot explain you that here. It's a bit complex structure, so I need more time to figure out that one. So maybe I will just paste this and I don't know, maybe contact me on Twitter or somewhere else where I can look this up. Yeah, Mara looks pretty good. I've been looking Mara for the potential reversal. So as you can see, I can identify on Mara clearly a 5-wave pattern. Also, I got some guys on Twitter, I mean, asking or claiming that the wave 3 is shorter than wave 1. It's just very simply easy. You just go and put measurements and you will see that that's not correct. Wave 3 is longer than wave 1 here on this expanding ending diagonal pattern. So you have clearly a 5 waves up, 5 waves down in A, up in B, down in C to equality. From lows, you have a 1, 2, up in 3, 4, and 5. So a little bit more downside, I think, in Mara. And we are ready either to go in X wave. So that will mean that the trend in cryptos lower isn't finished, and that we are going to continue after this X wave further lower. Or if we pass this actually previous B wave and the X wave, this will turn to be a wave 3 on the upside, and then that will mark a pretty bullish scenario for Mara. Okay, so I think we are definitely gonna go higher after this corrective pullback is done. My first target will be 32.17, and from there, I think if we continue further, this will actually allows us to remove this X and continue in this ABC and actually continue to look this as a pure impulsive developments on the upside. Okay, so that's a relatively simple chart to process. William, I already did dollar index. That's pretty close to USD euro, because dollar index is 57% of comprised of 5 currencies, but 57% is euro. So when you look dollar index, it's almost not just exact, but the same as you're looking either euro dollar or dollar euro, however you like it. Ethereum correction, I think I published that on my Twitter page. So I do publish this sometimes these charts on a smaller time frame on Twitter. So if you want to follow that, you can look on my Twitter page, or either try the trading analysis crypto service. So yeah, so it's relatively simple. So I do think the 5 waves down is done, and that we are in a corrective pushback on the upside. The resistance area, it's 1745 for now. Yeah, let's look 1 or 2 more, and then we're gonna wrap it up. I try to keep this a little bit shorter. Of course, I'm gonna look 1 more or 2 more, and then we are done. So ADA doesn't show anything yet, so we are still in this process, or either basing formation, or we are moving just sideways. So I don't see anything yet on ADA, no impulsive wave, nothing from here. So as you can see, we are maybe in a basing process formation. So on ADA, I don't see anything tradable yet. Yeah, let's look at Ethereum, Bitcoin, and let's close with this today's session. So Bitcoin and Ethereum chart, I think it's here. Let's examine that. We were bullish on that last time. We were bullish a long time on Ethereum versus Bitcoin. We started to look bullish on Ethereum, Bitcoin already from here. We identified this as a leading diagonal in a pullback, so we think we are going to start a larger degree fifth wave rise, and we do think that Ether might perform better. I have this as a wave X. I'm still not convinced that this is a start of a new rise. Usually we do correct until this levels, which is a 200 MA on daily, and that will be a very convenient thing for the secondary wave. So potentially a little bit more back and forth before we continue up. Okay guys, so thank you on the attention. And click the like button, subscribe button. It will help us, of course, if you value our content. And visit Trading Analysis website for the crypto trial, so you can check us out. We have lots of things for cryptos, and we are designed for the people which likes to be kind of a more reasonable in trading endeavor than the hyping crypto community roller coaster. So thank you on the attention, and see you next week, guys. Bye bye.